Welcome back, everyone. This is our Gold Weekly Review. My name is Angelo Zittis. This week's title is Can Higher Grounds Be Tested? Gold's price continued to push higher in the previous daily sessions as the economic uncertainty looming around the planet does not seem to be leaving anytime soon, despite the fact that the cases of the coronavirus outbreak have seen a reduction in Asia, Europe, and other countries. The economic sentiment at the moment remains rather low, with consumer confidence reaching bottom levels. This report aims to identify and detail some of the most important gold price drivers at the moment, bringing together our own views on the matters. First, we start with a small update on the global economy's condition, as gold's price could be reacting to a more general overview by economists and analysts. Some view the current happenings around the world as signs of an incoming global recession. Unemployment is rising in many countries, businesses find it difficult to operate at full capacity, and governments are constantly announcing new economic stimuluses to ease the economic difficulties. Other economists view the situation as pure contraction for the US economy, which they forecast will lead to a significant drop of the GDP growth rate in the United States. The fears over the current situation are increasing, as the negative effects from the coronavirus update could be leading to more desperate measures taken by investors. This could also be among the reasons that gold's price has moved higher in the past sessions. Also, the matter goes even deeper due to the fact that the measures currently taken by governments, especially on the fiscal front, may not be the required for the specific circumstances. The same goes for central banks around the world that are currently using measures used in the previous recession, about 10 years ago. The idea here is that adding to an overloaded debt system to help you overcome a temporary storm could help you in the short term, but not in the long term. Are these measures just prolonging the system flaws? Gold's bulls could be feeding off these indirect messages, implying that the global economy could be heading for more trouble. On a separate note, the adverse economic impact was also confirmed last Friday upon the release of the US employment report for March. The data indicated unemployment had increased from 3.5% to 4.4% in 1 month, while non-farm payrolls indicated the staggering figure of minus 701,000 jobs had been slashed. Not much reaction was observed from gold's side upon the release of the data, but the upward movement seen yesterday may be confirming some worries over further job losses this week. Looking at the relationship gold's price maintains with other instruments makes it easier for us to understand how traders are currently responding to market updates. It also provides trading opportunities as trends are revealed that could prove useful to making trading decisions. Traditionally, the closest relationship gold has is with the US dollar. In our view, during the past daily sessions, the correlation of the two instruments, the greenback and bullion, has been positive. This is not so common, as the two are usually negatively correlated, but it could be implying that the US dollar has taken on qualities of a safe haven asset for the time being. As a conclusion, we would like to note upcoming financial releases that could move gold's price in the next days. The most important events, in our opinion, come first on Thursday, the 9th of April, with the release of the weekly initial jobless claim figure, which has been dramatically ascending in the past weeks. And we have the preliminary University of Michigan sentiment reading, which comes out on the same day. In addition, on Friday, the 10th of April, we get the inflation data from the US that is also expected to be of interest for gold traders. However, the general idea here remains that the markets are mostly driven by the worsening or improving situation of the coronavirus outbreak, and traders could take more action on such headlines. Moving now to our technical analysis, this is gold's 4-hour chart. Gold today tested our R1 16,063 level various times, but was not able to breach it for the time being. However, if the R1 is breached to the upside, we could see gold making an attempt to test our R2 1700 line, which is also the yearly high level so far. Keeping in mind gold's appetite for large movements, however, we would not cross out the R3 1750 level, which is also a multi-year high and was last seen back in 2011. However, if gold is to correct lower, the first level that could be tested could be the S1 1634.10 support level that was tested various times in March. Lower traders could be looking to place stops nearby RS2 1588.70 line that was tested on the 1st and 2nd of April but was not clearly breached. Even lower, the next possible level is RS3 1551 price that was last seen during the last 10 days of March. Please note we have added a red horizontal line to separate March from April. It is clear that in April, gold has a clear upward momentum, and it will be interesting to see if that motion could continue until the weekend. The RSI indicator below our chart is currently running on the 70 level, implying we are still in an overbought market for bullion. Yet the fact that the line turns downwards indicates some bull power may be starting to diminish. If you've heard something in this report that you found useful, make sure you apply it to your trading. That's the whole point. Thank you very much for your time. Enjoy solid trading.